Stock market investors, what's going on? My name is Jason and I'm an options trader in this market. I sell more options than I buy, right? So I want to show you guys today how to sell a cash secured put on a stock. So this is a little baby account that I run for one of my parents. There's around 15 grand in it. I have around $1,100 in cash, right? So last week I sold a NEO call for $6.50. Those 100 shares got called away. So every options trade is for 100 shares, right? So I want to try to get those shares back. So I'm going to click on NEO, and then I'm going to go to the Trade NEO option sections in Robinhood, and then I want to go to sell and then go to put, right? Because I have the cash. So now what I want to do is determine which option do I want to buy right now. I had to sell my 100 shares at $6.50. Right now, the $7 put option is going to give me 50 cents per share, or $50 when you times that by 100. So if you take the $700 it would cost to buy these shares minus the $50 premium, I could buy my shares exactly back for what I sold them for, $6.50. So what I always like to do is check out the Greeks a little bit, right? This 0.59 delta, you always subtract that from 1, and that's around the percentage of you making money on this option, right? They'll let you know the chance of profit here is around 58.6%. And then as we go down, this one is at 69%, and then so on and so forth. The farther you go out of the money, the more likely this will be profitable, but the less premium you will collect. I could do the 650 put, try to get the shares back a little cheaper, because 650 minus the $21 is less than what I actually sold them for. But what I think was an interesting strategy, because NEO's trading at around $6.73 right now. So if I want to get the shares back what I bought them for, exactly $6.50, as you can see by the break even point, I like this because I get the shares back at the same price I would have sold them at. So it doesn't really make a difference to me. And then if NEO closes above $7, I get to keep the $49, right? And with that $49, I can buy more NEO shares if I want. And they're trading around $7, so I can get 7 shares essentially for free if NEO closes above $7 this week. So that's the strategy I'm going to choose right now. You click on here and then you'll see the total credit, 49 cents. You times that by 100. That's how you get the $49. You hit continue. Go to review order, submit, and then we'll see if the contract sold right away. So there we go, guys. That's how you sell cash secured puts in Robinhood. It's really easy. It's really simple. And then immediately that money, what's going to happen is the $700 will get taken out of my account, and then I'll get the $50 back. So you saw it happen live right there. The $700 came out along with the $50 or $49 we got for trading that contract. So there we are, guys. We got a little bit of that cash, and now that NEO is down a little bit, since we got $49, I'm going to buy 7 shares, and then maybe I'll get lucky and get to accumulate these shares over the next few weeks and get most of my shares back, and then still have that wiggle room of that $700, right? So I'm going to buy the 7 shares here, hit done, and then we're going to go back, and then we're going to see I have 127 shares of NEO now. I had 120, but before the option sold, I had 220. So I want to get back to around 200 shares so I can also sell covered calls. So that's our ultimate goal, to be kind of going on both sides so I can trade. I have a NEO call for way far out at $8, which is not looking too good right now. That's why I like selling the cash secured puts, right? To kind of buy some of those shares back, and if we hit $8, we'll be okay. Because we're down a little bit on these NEO shares, because if you look at NEO over the last year, they're down over 20%, and over the last 5 years, I mean, if you look at the peak $60, it's just been downhill, 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 downhill. So if we look Our cost average is around 15 bucks, so we're still underwater on these shares, right? So I want to try to accumulate as much cash as I can. $50 a week, we could start chipping away at these losses, right? So I can sell covered calls and sell the cash secured puts and kind of go on both sides of the fence here and make us a little bit of cash. And then we'll slowly chip away at the losses here, and then we can buy some other stuff. The stock market is a little red today. As you can see, all the stocks I own in this little baby account: Sirius Radio, Berkshire Hathaway, QYLD, VOO, VOOG, some JEPI and some JEPQ, some Realty Income. This is like a dividend-only portfolio with a couple growth stocks like DraftKings, which I'm up considerably on, 30%. And then I also sell cover calls with that as well. So now I'm looking, and now that the stock is down a little bit today, almost 4%, which is not good. So I want to go out a little bit farther, right? Because I'm willing to sell these shares over $40. So now I'm going to show you guys how to sell a covered call, right? I can show you both of these strategies, right? So we're going to sell covered call. I don't want to do this week. I want to do next week, right? So that's 2 weeks out, and I'm comfortable selling these shares in that $40 to $42 range. 42 is, since the stock's down 4%, so I'm going to go to this 31. What do I want the 42? I'm going to be a little bit more conservative. Chance of profit around 84%. The strike price for not this Friday coming up, but the following on the 18th, is $40. Actually, you know what? I'm going to be even a little more conservative because the monthlies expire on October 18th. So there could be some volatility there, right? So I'm going to click on the $23 covered call, hit continue, go to review order. So now on October 18th, if the stock is above the strike price of $41, I will have to sell at $41. But since I'm already profitable, that doesn't matter to me. I'm going to hit submit. It filled right away. I get my $23. And there we go, guys. That's how you sell covered calls. So I showed you in this video how to sell cash secured puts and how to sell covered calls. I'm not necessarily a buyer of options, especially when the market has run up so much. You want to buy options like a year and a half ago when the stock market was crashing. That's when you load up on options buying. And then when the market is running hot, you want to sell some covered calls. That's, in my opinion, the most successful strategy. You sell puts, you sell calls in market conditions like this, but you got to be careful because when the market has run up a lot, you don't want to sell covered calls too tight. I'd rather go out far, in that 3, 6, 9, 12 month range at like 35 to 50% discounts on what the stock is selling for now. So if there is a market correction, you're not left holding the bag, right? So, but covered calls, this is a great time to sell covered calls when the market's running hot. And if your shares get taken away, it's not really a big deal. And then you can sell puts on the other end of that, like I'm doing with NEO, and give yourself some downside protection. All right, if you'd like these kind of option videos, let me know in the comments below. If you have any questions, I would love to answer them for you. Don't forget to like and subscribe, and we'll catch you on the next video. Peace.